Victoria Scholar in London. She's a market analyst at IG Group. Great to have you back with us, Victoria. Now, we did see a bit of a sell-off after Donald Trump surprised the markets by saying that he had stopped those negotiations. But how are investors feeling now?
Yeah, well, like you say, Donald Trump taking to his favorite platform, of course, Twitter, to send a whole host of tweets that effectively confused the markets. I mean, Tuesday afternoon, we saw a sell-off after the president suggested that these talks could be pushed back until after the election. We know that's on the 3rd of November, so less than a month away from now. But then Trump sort of turned around, softened his stance, suggesting that there could be additional funding for airlines and small businesses as well. So it's kind of confusing. I mean, despite that initial sell-off that we saw on Wall Street that landed the major averages in the red into the close, Asia was pretty strong, hitting 2-week highs. Europe a bit mixed, and now US futures pointing higher. So, like you say, a bit of confusion, but it's not really just this that seems to be front and center for markets today, because of course we know we've got the vice presidential debate between Pence and Kamala Harris, and also we'll be hearing from the Fed with the latest meeting minutes from its former decision.
Now, these aid negotiations have been going on for many weeks now, but remind us, why do investors want to see US lawmakers agree on a new package sooner rather than later?
Yeah, well, of course, we know that the US economy and the global economy has been hit very badly by the global pandemic. That's no secret. Fed Chair Jay Powell has already warned that what he can use, which is monetary policy alone, isn't sufficient to get the US economy kick-started. So it really needs support from the fiscal side, from Washington, in order to get the US economic recovery going. I mean, the risk is that we could see a delay to the stimulus, and that could jeopardize the recovery. Now, these budget talks have been going on a long time between the Democrats and the Republicans since July, in fact. And we've seen parts of the economy struggle or do not quite as well as they might have done as a result, like business growth, the labor market as well. So if we did get a deal, of course, that would pump trillions of dollars into the US economy. So as you can see, we're currently at gridlock right now, and any delay just sort of worsens the situation. I think one thing that we do know is whoever's elected, whether it's Trump or Biden, that will at least create a deal in November.
And we know oil prices had a rough ride last week, but they've taken another tumble. Can you tell us why they're under renewed pressure right now?
Yeah, I mean, it's been a choppy week for the oil markets yesterday and today, once again, driven by Trump's suggestion that the stimulus deal could be delayed. Also, there are a lot of other concerns in the oil market right now around Hurricane Delta and oil strikes in Norway. But in terms of today's price action, I think that the market has had a couple of strong sessions, and now it's giving back some of those gains. It's effectively reflecting the nervousness about what this delay in terms of the fiscal stimulus could mean for US economic activity and, in turn, demand for crude. But then on top of that, we also had data on US crude supply, its stockpiles, which saw the first build in 2 weeks. So that's suggesting there's more supply out there than expected, and that in turn pushes prices lower.
Yes, a few headwinds there for oil markets. Victoria Scholar, a pleasure as always. Thank you.